Let's talk about how to backtest, especially if you're a beginner, the proper way. If you are especially doing ICT, in a way that I found useful, because I think people really talk about market replay, equity replay. You don't really need it. Me personally, I don't use it. I use it just so I can get to the time frames quicker. But just backtesting, just from a daily standpoint, and then seeing X, Y, and Z, you really, for me personally, I don't need that, and I'm going to explain why, and I'm going to see again. I wish I knew this when I was a beginning in trading, because this is how I should be looking at it. You really want to focus, especially with ICT, looking at macros. You really want to specify what times moves are happening, right? On the higher time frame, so I'm going to give you an example of this day right here that I'm back testing. So basically, I'll go to the 15 minute, right? I'll go to the 15 minute. I'm going to start right here. I'm going to start right here because I feel like this is a good place to start. So in the 15 minute, if I was coming to this day, I came into this chart and this part right here. We had this massive move already down. So if I was looking at this, I already would be bearish, right? I'm already bearish because there's no reason. So on a high time frame, I'm bearish just looking at this 15 minute. Now you're probably like, okay, well, clearly you can see the move is working and the move is like going down. That's not the point. The point is in real time, if I had saw this candle go back into this 15-minute fair value gap, I'll be bearish. Whether the move plays out or whether it doesn't play out, I will be bearish. So with that understanding, I want to see what happened inside this 15 minute. So I'll go straight to the 1 minute. You can go to the 5 minutes as well, but I'm just for save time, I'm just gonna stay on the 1 minute. And I just want to dissect what happened in this price action. So this is where me marking out and annotating. I think that's the biggest thing that I want to get by is annotating. We need to be annotating what's happening instead of me going back into market replay and then just like letting the trade play out. Is really no need. It's really no need. So market replay, excuse me, not market replay, macros. So I'm looking inside macros and seeing what times the trade moved. On the 15 minute, you can see that I was already bearish. So now I'm just looking for a setup. Me personally, I like a stop run. So we got a stop run right here. So we put all that means is we put in the high, right there. Next, we put in the high, then we take those people out. Now I want to see us create a breaker or a block and then start going lower. Create that fair value gap right there. Just drop it into there. I'm studying and see if we get back above here. Then you see that we start initially dropping down. Now this is where you dissecting, right? This is where I potentially saw a short in real time. And like I would have potentially saw a short somewhere like this. Stop loss above here. Getting in somewhere up in here at this candle. You don't have to be fine and dandy, like somewhere up in here, somewhere up in here. Just anywhere when we came back below this swing, making this an aura block. And I got this breaker right here. So annotating that, going down and looking at that. And then aiming for internal because this is 60 points. So aiming down for internal, maybe leaving a run up for a sell side right here. Notice what time we did all that, right? Right before I got the 50-10 macro. So this is right before that 150 to 210 macro. And you can see this trade started working, or in my not in favor, but the setup started happening around 145. Again, 146, right, like 4 or 5 minutes right before the macro, which is again valid entry, valid everything that you can speak of, and getting in and taking partials and all good stuff. Do I see another setup inside this macro in this timeless window? Remember, I'm looking for this to be initially the draw of the liquidity, and then I'm looking for another run. If I do take a trade, I would want a stop hunt to be happening, right? See some liquidity, equal highs. We take those people out, and then we mark these equal highs out. Come back down, take those people out. So let's annotate that. And this is what I'm really doing, me personally. I'm annotating screenshot. So we take those people out. Start trading lower. Didn't I just say this is kind of my A+ setup? Stop hunt, waiting for market structure break, then waiting for a break or X, Y, Z. In this case, we got like a increase. In this, we got like a inversion for value gap. You got a breaker, you got aura block, whatever you want to use. Whatever. In this one, this kind of preference what you want to use. Maybe you want to use inversion, so you get this entry. Maybe you get in early and then put more on there, right? X, Y, and Z, how you feel comfortable. But I think the basis of this, the idea of this, is looking at what time this started happening. We come back above 1:30 opening. So 1:30 p.m. You know, that's the 1:30 opening is the p.m. session. We come back above there one more time. We come back and trade above 2 o'clock. Opening price, I talked about it in multiple videos. Jewel swing, getting in as we start inversing this bullish fair value gap inside this 15 minute, right? This 15 minute fair value gap. Trading lower, going for that sell side. Maybe that was partials right there, X1Z. Then you can just leave running to these equal lows. Right, that's me personally how I would like to backtest. That's how I do backtest, and this is me taking screenshots of this day, putting them into a folder, putting them into like a, you know, a file, whatever you want to do. I'll talk about that in a different video, but it just means just organizing what I'm looking at on the lower time frame, and then on the high time frame, was I bullish or bearish? I was on the high time frame, I was bearish, right? And this, what this does is it allows you to feel free to be like, okay, all I gotta do is come in and get the bias correct, or think that I have a high probability bias. Once I have a bias, now I'm looking for stuff like this on lower time frame, right? I'm practicing on looking for this type of signatures, looking for prices do this type of in macros. Because then if I in a real day when I know my bias is correct, then I just gotta do the exact same thing I've been doing. I want to go to a different day, so I'm just going to literally scoot over. I don't want to make this video too long, but I just want to give it another day. So I'm just literally, you can see me back testing and organizing some notes. We can start with this one, guess. Do this one. So again, what I'm looking at, and I think I did take the trade anyways, but yeah, I did take the trade. But the idea was, why am I taking this trade? So if I go, this is why I use market replay. The only reason I'm using market replay is just so I can get to this 15 minute quicker. So if I go to the 15 minute, right, I can see on the 15 minute. Again, if I saw this in real time, which I did, and I really took this trade, I'm looking at 15 minute. Look at that. I see a 15 minute fair value gap. I'm bullish. Whether the trade plays out, whether the trade doesn't play out, I think, yeah. I think I did this. No, I think I did this for a reason. Whether the trade plays out or the trade doesn't play out is irrelevant. It's more of looking at where will I be on higher time frame. Why am I looking for equal highs? Okay, this could be a potential draw of liquidity. We're bouncing the 15 minute fair value gap. I just want to see these go up. Once I got all that information, I then look at the 1 minute, go to 1 minute, 2 minute, 5 minute, whatever you feel best for you. But I'm just looking at, okay, once this drops down, I see us put in a low. Remember I talked about that, right? We put in a low. We take in another low right here. Boom. Got equal lows right here. I want to see this ran, right? I want to see this get ran. And I'm going to do equals, lows, and X those people out, stop those people out right there. Okay, once we stop the people out, okay, what we do? We come back up, side this order block, making this a breaker, right? Low, high, low, low, rip up. That'd be a breaker. Can take that if you want. Bullish breaker, boom. Got a bullish breaker, got a buy, got inversion for Vega, wherever. Like I said, it doesn't matter whatever you like. And notice what time this happened, right? At 10:50, look at that on daily time, 10:50 to 11:10 macro. We are getting an inside trade, A+ in my opinion, right? Come back up, equal highs. Stop some people out one more time before we go back up. Right, you can annotate this. If I was already in the trade, you was trying to get into this trade right here, you can annotate that, right? Stop these people out, come back down one more time, inverse in that fair value gap, leaving this as a breakaway gap, because we have no reason. Because after we stop people out, it is no reason for us to come back to lower. So maybe you can move your stop up, move your stop up to like right there, and then going for the equal highs, right? That's all I'm doing. Like I would screenshot this. I already did it, but I would screenshot this and looking at what times the trade play out. Like I said, I don't really look at. I don't need market replay to like be the end of all things. Like I said, it can be, but I put, me personally, especially beginner, I put too much preference on it. I put on too much. Like I gotta get right in market replay. I gotta get right in market replay. When instead of me dissecting it from what do we do on the 15 minute 1 hour, and then from that standpoint, what can I do differently inside macros and stuff like that? Because if I know I'm bullish on the higher time frame, bearish on the higher time frame, then I should be looking for these type of signatures, right? inside these type of macros. That's going to help me get in the trade. That's going to help me understand what I'm looking at and being patient, right? I cannot take. How do you know not to take the sale? I just told on a 15 minute, I'm bullish, right? Whether we take the trade or not, I'm looking for bullish signatures, and understanding what happened in price and why I should be bullish, why I should be bearish, and just practicing, like, right, practice, screenshotting that and just remembering why, getting a good feel of why you was taking the trade or not. Let's see if we get one more, just a fresh one. I think this would have been a good one. Again, I took this trade, but we can talk about it. We can just annotate it. Let's just say we started at again, only time I use market replay just so I can when I go back in the higher time frame, it stops me somewhere up in here. That's the only reason I use it. So I'll go into 15 minute, okay. 15 minute. See a bearish fair value gap. Bearish fair value gap, where we at? FEG, okay. Do we got one on the 5 minute? We do got one on the 5 minutes, so I'm just going to mark that out. And you got bearish fair value gap right there, and we got new week open the gap, so that's a good draw of liquidity right there. So, me personally, I will only feel comfortable going towards that draw liquidity. New week open gap is a very strong signature price. So again, we got naked is on here. So what can we do? So remember, this is 15-minute fair value gap. This is a 5-minute fair value gap. So let's just see how we operate with macro. So let's say you want to trade the PM session, right? You want to trade the PM session. PM session, I like to start at the 1250 macro. So I want to mark out 12 o'clock. That's all I want to do. 12 o'clock. Boom. That's 12. That's my 12 open. Okay. Now, me personally, I really like the 1250 macro. I'm okay with the 1220, 1240 macro, but I really like the 1250 macro. So I'm just going to mark that out right here. Where is that? Cool. 1250 macros right there. All right. Okay, we got the 12 open and we got the 1250 macro. You can see if we had started a little bit early, I feel like this is again putting the high for you. See, it's same stuff, right? We put in the high, take that high one more time, market trick shift, boom. That would have been a great sell. Right 5 minutes 4 or 3-4 minutes before the macro, which is totally valid. But let's just say we missed a move. For whatever reason, we missed a move, and for whatever reason, we missed a move. All good. Let's see what happens. Come back above 12 o'clock. I mean, at 12 o'clock, we'll come back above this 15-minute fair value gap. To me personally, this is like a good trade right here. 130. So I'm marking out these times just to give me a good understanding. Down. Oh, excuse me, right there. No, I had it right the first time. It's a down candle. Boom. 130 open. So you can see we're dropping down in the 150 right here. Big explosive candle, getting a sell in here, maybe looking for a sell here. Maybe we've been missed on this trade, but it's cool backtesting, being okay with that. I think this would be too low for me to take this sell if I wasn't already in. I do like how we took this high out, came back above 130, then dropped aggressively back down. But I want maybe something return right here, because I don't know if I would put my stop. I don't know if I would did this. Right, I would maybe looking for something like this, then targeting lower. So let's see if we get a stop hunt. Oh, sorry, I don't want to do that. Let's see if we get a stop hunt above here. But if I was still in this trade, I would be looking out for that. Let me go further. Let's see, we got okay. 1 minute. There we go. For me personally, I don't see a good setup that came out of this. Possibly this buy. Possibly, right? These equal highs right here. But me personally, I'm not seeing a great entry. And that's okay. And this is where, again, I will back this. I will go back and screenshot this. I think I already did this day. But either way it goes, if you screenshot this and look at this, notice the days that it didn't work. As in, like, hey, I had my bias, I was set for lower. What did the price showing me? It's not showing me no really. I didn't see no clean. I'm not seeing no clean entries going towards lower. Maybe something like, say, you could be bullish for this because we got equal lows in here. I feel like we got equal lows and equal highs, so it's kind of like a what's what I'm looking for. It could be both ways. Oh, you could play this both ways, but just looking at this 130 open, we did drop down, and this could consistently. If I was looking at this, I usually don't trade it for this long, but if I was looking at this, you got the 320 macro to 340, seeing a potential buy to just clear up these equal highs right here. But I think this delivery wasn't as great as the other ones were. And it's okay. Like, this is why I'm backtesting. This is why I'm screenshotting. Like, notice how the hesitation that we're having in these sales, and this is where we're not dropping down, leaving fair value gaps. And if you compare it to both of the trades, the other one and the first one, you see that this one's looking more suspect of us getting to that draw liquidity than us taking this buy. And also noticing that once we took this, I couldn't have gotten the sale, got new wick open the gap, I'll be annotating why should we not be taking a sell. Well, now that we hit the draw liquidity, maybe we had SMT on ES. Now I could be looking for buys in this case. So I got both. Like I said, this is me just looking and, like I said, looking and reading the information. But you have to understand, when I'm backtesting, I'm not necessarily looking trying to be right or wrong. I'm necessarily looking at what are we doing inside the macros and seeing that line up for my bias versus me looking at right for wrong. Because at the end of the day, if I look at a price action and I'm bearish or biased, or I'm a high time frame I'm bearish or a high time frame I'm bullish, I necessarily just need to see price signature to and inside macros to kind of line it up. In this case, you can see that on this right here, and it's indicating not too much bearish movement. Maybe this was the draw liquidity. Once we hit that, then we start reversing. I do like that. And then this is what I love about that. So I'm seeing that if I was bullish, 2 o'clock Jewel swing, right? It's bringing all the stuff that we be using. 2 o'clock Jewel swing, come down, come back up. So we got that Jewel swing below 2 o'clock. Right above, we already had the manipulation below 12. 1 o'clock, I want to say we manipulated. Like, you just kind of start understanding, like, I'm not necessarily trying to be right. I'm necessarily trying to understand what's happening in price, annotating it, and then also talking about what could I have done better if I did get it wrong for the draw liquidity. And also, hey, what could have been told me that, hey, what could have told me in real time looking at price action that this isn't folding the way I was looking for. And the way that we took this high and then dropped back down lower, I've been looking for reversal, looking for buys, because in this case, I'm thinking these highs right here are the draw liquidity, and maybe this was the draw liquidity at first. Once we tapped that and we're reversing and getting ready to attack these positions right here for the end of the day macro. So this is a small, like I said, I don't want to make this too long. I have a way more detailed video probably in Discord, and get understanding what you should be looking for. But I think this is the better way of looking at it, as looking at macros, looking for times, and looking for and studying this, and then screenshotting that. Go for high time frame. Yeah, sure I was bearish. Yeah, sure I'm bullish. That's cool, but understanding, looking at price inside fractal times that you would be looking for to take a trade, that's pivotal in my opinion. Hope the video helped. Hope it's educational, and see you in the next one.